Hey everybody, today is August 16th, and today we're going to talk about the price of Bitcoin. We're going to talk about Bitcoin trying to break 50,000, trying to break above our resistance level, Fibonacci resistance level, as well as staying above the 200-day moving average. And we're going to see if Bitcoin has what it takes to break above 50,000 to new all-time highs, or whether this will be a bull trap that will roll over and continue down lower. Before we begin, please read this disclaimer, and you can pause this video as you read it. Okay, so in our last video, we talked about how Bitcoin broke above the 200-day moving average, which is this blue line. And this is a very important line because this is a long-term moving average that a lot of institutions use, right? And when Bitcoin stays above this line, it usually signals that Bitcoin is in a bull market, for example. And we said this many times in previous videos that we want to see Bitcoin stay above the 200-day moving average, which is this blue line, right? Because in our last bull run, you saw from late 2015 all the way to 2017, right? This massive rally, this massive bull market cycle, we saw Bitcoin always stayed above the blue line, right? And we actually, in fact, we had one time where it came down, but it didn't close below the blue line. We wicked back above and we closed above the blue line. So especially in 2017, right, which is our closest comparison for this year, right, where we have this really amazing parabolic rally, we always stayed above the blue line, right? That always acted as strong long-term support. And of course, earlier this year, or a couple months ago, we had Bitcoin basically correct from the all-time high of just under 65,000, correct 55%. And that correction was caused by two reasons. First, Elon Musk suspending Bitcoin as payment for Tesla cars, and also China cracking down on miners, basically shutting them down and seeing the hash rate fall. And of course, the price of Bitcoin fell with the hash rate falling. But now that things are seemingly recovering, and we'll talk more about the fundamentals after we get through the technicals, but Bitcoin definitely is staging a strong recovery from 30,000 bottom here, finding strong support on this Fibonacci support level that we basically talked about how it's very important this level because we also found support earlier this year in our first major correction in January, as long as finding support, trying to find support many times before finally bouncing higher, right? So now we are facing our strong resistance level, which is this next Fibonacci channel line, which is our Fibonacci. Used to be support, which we had over here. Over here, unfortunately, we broke the support and flipped it into resistance when we broke below it, right? But now we are getting up to that level where we're starting to test this resistance level and seeing if we can not only hold it but break through, right? So two things I want to talk about. First is the 200-day simple moving average. Remember, we broke strongly below here and we stayed below for several months, right? And I talked about how the longer we stay below the 200-day moving average, right? I talked about how I just said that we have to stay above the blue line because in our last bull cycle, when Bitcoin is a bull market, the price of Bitcoin is above the blue line, the 200-day moving average, right? So now that we are above the blue line, that's really great, but we are also trapped below this resistance level, this Fibonacci resistance level. So just to make things a little bit clearer, let's switch to a line chart so you can see how the line is basically and the line basically gives you the daily close of Bitcoin, right? So right now we are seeing that the price of Bitcoin is trapped between the 200-day moving average and the resistance level over here, which is not necessarily a bad thing, right? This is really just bulls are trying to grind higher. And I said in my last video how there's two possible scenarios that I was looking for: either a strong break above the resistance channel with a pullback, test this resistance level as support, and if we can hold this level, we'll flip the resistance to support and continue up higher. The second scenario is either we come up to the resistance and we basically grind along this resistance channel before pushing up higher, slowly absorbing the supply and taking out the bears, right? And looks like that's what's happening right now. And yeah, so we might actually see Bitcoin go sideways for a couple days before going up higher. So but the important thing is as long as we stay above this blue line, the 200-day moving average right here, as long as we stay above, we have a chance for it to go up higher, right? Because remember, I said that we don't want to see Bitcoin go below the blue line anymore, right? Because in a bull market, we tend to see Bitcoin stay above the blue line. So as long as we stay above the blue line, I think that going sideways right now is not necessarily a bad thing, and this could be the bulls really coming in and trying to take supply out the markets, right? If the bears, right now there's a lot of sell orders, right? And if we can slowly absorb that supply, eventually there's not going to be much supply left, and there's going to be more demand than supply, and that's going to cause the price of Bitcoin to go up a lot higher. And I think that once we break through this strong resistance level, I think a push up to the previous all-time high around 65,000 is going to be a fast rip up there, right? Because once we take out this resistance level, there's really not much more resistance all the way up to our next resistance level, which is this next Fibonacci channel, which is also our previous all-time high, just below 65,000. So as long as Bitcoin stays above, just to summarize, stays above the 200-day moving average, this blue line, and we continue to take supply off the market, grind sideways before pushing up higher, I think that Bitcoin is looking very bullish, and so that's the technicals. Let's look at the MACD really quickly, right? MACD is looking really good, crossing into positive territory, printing green histogram bars, but of course we want to see the MACD continue to go higher, and we don't want to see it cross and go down below, right? So we might see it go sideways, maybe cross, and then push up higher. And yeah, RSI also trending above overbought. Not necessarily a bad thing in a bull market, right? Because in a bull market, we can see RSI signal overbought for a while. It's not necessarily a bad thing, but that basically generally signals strength, right? That's why we want to have multiple indicators that are working together, telling us, giving us more confirmation of where the price is headed. So right now, it does seem like the bulls are in control based on our oscillators, but we want to see more supply being taken off the market by the bulls. And we don't want to turn this into distribution like we saw over here, where it's the bears that are selling and pushing the price down, right? We want the bulls to stay in control and continue to absorb the supply and push the price of Bitcoin higher. Now, let's look at possible bear scenarios. Oh, before that, let's talk about the weekly close. We had a weekly close yesterday, and it's a very good candle. We basically kissed the Fibonacci resistance level here. So we might actually see a bit of a pullback before attempting to go up a lot higher. So I can see us pulling back for the first half of the week and either closing red before continuing higher, or basically faking out the bears and then pushing up higher and closing above the Fibonacci line, which is personally what I like to see. I like to see a close and a strong break above the resistance line. And I think that'll give us a more a clear push, basically a clear signal to push up higher and retest the previous all-time high around 65,000, right? But of course, I've talked about in the past how there is possible bearish scenario that's looming right now, right? In previous cycles, we've seen Bitcoin come down to the weekly. This is the weekly chart, the 50 weekly moving average, which is a silver line. We see a strong bounce every time it comes down, bounce, and then eventually it fades, and then once it breaks below and starts closing below, we enter a bear market, right? Same thing in 2018. So this was 2014. After a strong rally in 2013, strong rally in 2017. In 2018, we also saw the price of Bitcoin come down, touch the 50 weekly, push up higher, and then eventually fail to hold, break below, and enter a bear market. So right now, we did see Bitcoin come down, and this graph was done in June 24 on my Twitter channel. Subscribe to or follow me on Twitter if you haven't. And of course, we've seen more of development. So we basically came down and touched the 50 weekly, right? And we've had a strong bounce above, just like we had in the past. But right now is the moment of truth, right? I think that if we fail to hold the resistance level, if we fail to break above, and we come down and we break below the silver line, which right now is around 35,000, which will eventually it'll continue up higher as the more weekly handles continue to print. But the bearish scenario that I'm looking for is if we come down and we break below the silver line, then we will likely enter a bear market. So that is the biggest bearish threat that we have to Bitcoin right now. Of course, I'm still bullish on Bitcoin. I do believe Bitcoin has the strength and potential to continue to all-time highs by the end of this year, but it's really important to look at Bitcoin from all angles, right? We want to look at Bitcoin and look at all possible scenarios and not just be too biased in one direction, right? And that will help us with our risk management, so we're not going too aggressive in one direction in case Bitcoin does end up falling into a bear market. But for now, I do think that based on the technicals and on the fundamentals, that Bitcoin is going to continue up higher to new all-time highs by the end of this year, and perhaps I do believe it will continue and break above 100,000 by the end of this year. And so we just went over the technicals. Let's go over some of the fundamentals, right? Very important fundamental right now is the hash rate absolutely exploding right now, and this is what we've been waiting for, right? We saw Bitcoin bottom, the hash rate bottom over here, and it basically moved sideways for a while now, but finally we're seeing strong strength, right? It finally break out above this sort of consolidation area, right? And this is important because if you can see here, the hash rate peaked on April 14th, right? And the price of Bitcoin also peaked on April 14th. So of course there is a correlation between hash rate and price. We've discussed this many times in our previous videos. So the fact that the hash rate is starting to break out now, I think that this could be a leading indicator signaling that Bitcoin it will potentially break out even higher in the next couple of days. But of course, going sideways is not necessarily a bad thing, as there's a lot of sell orders, and I think that if the bulls can continue to absorb the supply, eventually there's going to be much more demand than supply, and that's going to cause a nice breakout rally to the previous all-time high of 65,000, right? Because there's really not much more resistance once we break this Fibonacci level. We're holding the 200-day, break above this strong resistance level, Fibonacci resistance level, and then strong break up to the next level, which is around 65,000. Now let's say the Fear and Greed Index, 72, right? Fear and Greed Index is definitely making a nice recovery, and we want to see the Fear and Greed Index actually stay above this and continue up higher, right? Because in our last bear market in 2018, we saw the Fear and Greed Index spike every time we had a bear market rally, which eventually always faded, and we basically just kept coming down to low Fear and Greed Index levels, right? Whereas in bull markets, right, we tend to see the Fear and Greed Index stay at elevated levels. So we don't want to see this thing fade down and continue down lower, because that will increase the probability that Bitcoin is in a bear market. We want to see elevated levels of Fear and Greed Index, right? Just like when we saw that epic rally that we had from October to April of this year, last October to April of this year, we saw the Fear and Greed Index at elevated levels. So it's not necessarily a bad thing when we see this. It just means there's a lot of strength, a lot of buying, and that we want to see the Fear and Greed Index continue up higher, and that will give us a higher probability that we're in a bull market rather than in a bear market rally. So now let's look at some of our other indicators. Of course, we've said this many times that the 2-year multiplier signals overbought territory, or at the top of the bull market when we break above this orange line and into the shaded area. We haven't broken above that line yet. So there's still a lot of upside left, and as Bitcoin continues to recover from this mid-cycle correction, we're starting to see the upper band go up, increase, right? So right now is at 104,000, and so of course Bitcoin not only can touch this, but breaks above it during the bull market cycle top. So this is just signaling that there's a higher top coming in by the end of this year, potentially, then it is signaling that we are in a bear market. So lots of upside, nowhere near overbought yet, right? Pi cycle top indicator, of course, we've crossed back into this orange line, which I've said in previous videos that this is usually a good time to re-enter the market, right? We had a bearish cross a couple months ago, but the lines crossed back into bullish, which is green above orange. That's the bullish posture of the lines, right? It crossed back within the next couple of days, and now that we've seen the price cross above the orange line, which historically has signaled a good time to enter the markets when the price crosses above the orange line and the green line is above the orange line, generally that is a good time to enter the market. So now we are not only crossed, but we're staying above it, right? What we want to look out for is if the price crosses below the orange line and continues down lower, like we did in 2014 and 2018, and that is basically a classic sign of a bear market. So if this price continues down lower and crosses below the orange line, we're likely in a bear market. But for now, we got to give benefit of the doubt to the bulls as long as we stay above the orange line. And I will be looking for the Pi cycle top indicator to signal my next exit by the end of this year. If this does end up being like 2013, and we have 2 market cycle tops before we enter the bear market next year. Puell multiplier, right? Signals overbought territory, market cycle top when we enter this shaded reddish orangish area, but we haven't even touched that line yet, so nowhere near overbought yet, right? So everything is basically signaling that we are still likely in a mid-cycle correction rather than in a bear market. Golden ratio multiplier hasn't even gotten high enough to print a dotted line yet, so in fact we only touched the purple line, which historically has been the top in terms of a mid-cycle corrections, the top of the mid-cycle corrections, like in 2017. And so and also as long as we stay above this orange line, right, which is the lower boundary of this indicator multiplier, golden ratio multiplier, this is signaling that we are likely in a mid-cycle correction rather than in a bear market, because in a bear market we tend to not only break below but stay below the orange line, right, like in 2014 and 2018. So as long as we bounce, we have a strong bounce here, we continue up higher, and not only that, but the upper boundary continues to go up higher, which will give us a higher potential exit top in the price of Bitcoin as the price of Bitcoin continues to up higher. And when we eventually print this dotted line, when we break above the purple line, that price will likely be a lot higher than it is now, perhaps $200,000 or even $300,000, giving us a higher potential exit signal for the price of Bitcoin by the end of this year. Z-score, of course, signals overbought exit signal of the bull market cycle top when we break through into the shaded area and perhaps above the shaded area. We haven't even touched the shaded area yet. So another indicator signaling that we are perhaps in a mid-cycle correction rather than in a bull, in a bear market. And so just a lot of upside, right? I mean, all of these indicators basically telling us that there's a lot more upside left, that we're nowhere near overbought, right? If anything, we're in a mid-cycle correction, and there's still, keep in mind, there's still a couple months left in the year. I mean, we're still in the summer of this year, right? So, and Bitcoin historically tends to accelerate and go parabolic by the end of this year, right? Peaking sometime in November or December. So we still have a lot of months, a lot of potential left for Bitcoin to rip up higher. So, yeah, so it's a lot of exciting potential for Bitcoin in the next coming months, especially as the fundamentals like the hash rate continues to recover, right? And if Bitcoin or if Elon Musk accepts Bitcoin again, as he hinted he may by the end of this year, that of course will be another big catalyst for Bitcoin price going up higher. So our last indicator we'll look at is the stock to flow model. This is everybody's favorite. This is probably the most popular model that we have in Bitcoin right now. So what this model says is that the price of Bitcoin should be around where the red line is. And usually what happens in a strong bull year is that we stay below and eventually go parabolic and we overshoot to the upside, and then in a bear market we tend to overshoot to the downside, and then the price of Bitcoin tends to stabilize where the red line is before making the next move higher in the next cycle, right? So right now, what happened was earlier this year, Bitcoin's price went up a little too quickly, and we actually overshot into this red territory. And just like we did in 2013, we had a strong correction, right, before going up a lot higher in our next cycle by the end of 2013. Whereas in our last cycle in 2017, we actually stayed below this red line before breaking up higher by the end of the year. So right now we're seeing Bitcoin very mimicking very closely the mid-cycle corrections on our last bull cycles like we had in 2017. And to really accentuate this point, we can look at the deviation, which is this graph on the bottom of the stock to flow model, which tells you how much the price of Bitcoin is deviating from the red line, which is where the price should be. And we saw a very similar deviation, not only statistically, but also on the same date, right? Like, so this is 2017 deviation. See how 2017 and 2021, the deviation is very similar, right? This is July 16th of 2017. And now look at here, July 20 of 2021. So very similar deviation on very similar dates, right? And so we're basically seeing Bitcoin track very closely what we saw in 2017. So if 2017 we broke above, overshot before entering a bear market. So we too see Bitcoin overshoot and go up a lot higher. We can see Bitcoin spike into the 200, even 300,000 range. You know, the sky's the limit, right? Bitcoin can go really high by the end of this year. So, and there's still a lot of months left, right? Like 5 months left. So still a lot of potential for Bitcoin as we exit summer and head into the fall, which is where Bitcoin tends to peak historically in 2013 and 2017, right? So just to summarize, very bullish on Bitcoin. As long as we hold above the 200-day moving average, simple moving average, which is this blue line, right? As long as we hold above this level, we continue to trend this Fibonacci resistance level and eventually absorb enough supply that there's more demand than supply, and we eventually break above. So that's what I see. I do think Bitcoin will continue to move sideways for the next couple of days before eventually exploding higher. And I do see very little resistance until the next Fibonacci resistance level, which is our previous all-time high, right? 65,000 over here. And of course, everything that I just looked at, including the hash rate. As long as the hash rate continues to recover, that means that the miners that got shut down in Bitcoin in China are relocated, and they're setting up shop again and basically running their mines again. And of course, as long as the hash rate recovers, Bitcoin tends to fall. The price of Bitcoin tends to follow the hash rate, and yeah. So everything just looks very bullish right now. There's really technical analysis, fundamental analysis, like everything just looks very bullish. There's still a couple months left before the end of this year, right? There's still 4.5 months left, right? So still a lot of potential upside for Bitcoin, and we'll definitely keep you updated. And we definitely want to see Bitcoin stay above these lines. So we'll see in the next couple of days, next couple of videos. The next couple of days in our next video, if Bitcoin can stay above the blue line, the 200-day moving average, and eventually break above our Fibonacci resistance level up to the next level, right? Like 50,000 is definitely the next big psychological number. But I think if we can hold this Fibonacci resistance level, push above, I think 50,000 is a piece of cake. And once we break 50,000, then of course our previous all-time high of 65,000 is our next major resistance level. And once we break that, well, then I think 100,000 is on the cards. So it's on the table. So yeah, just to reiterate, very bullish on Bitcoin, and I'll definitely update everyone on the price of Bitcoin as we see the price action develop going forward. Thank you for watching this video. If you found it helpful, useful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.